When you think about the real giants of global banking, some names just stand out. Well, here in Australia, that name is Commonwealth Bank. It's priced like an absolute superstar, but you have to wonder, is that massive valuation built on solid rock? Or is it kind of defying financial gravity? Today, we're going to dig in and find out.
And here's exactly how we're going to do it. We are dissecting CBA from three really critical angles. First, how does it stack up against its rivals around the world? Second, how does today's price compare to its own history over the last 2 decades? And third, and this one is key, we're going to follow the money and see what the bank's own insiders are doing. This way, we get the full 360-degree view.
All right, so first up, why is Commonwealth Bank, or CBA as we'll call it, seen as such a premium player? I mean, what makes investors so willing to pay top dollar for its stock? Well, the data really tells the story here.
Okay, before we dive into the charts, let's just quickly get on the same page with 2 key numbers. Along the bottom, you've got the price-to-book ratio. You can just think of this as the price tag, how much you're paying for all the bank's assets. And then going up the side, we have return on assets, which is all about how good the bank is at actually making money with those assets. Now, the sweet spot, the place every single bank wants to be, is that top right corner. You're super profitable, and you've got a premium price tag to match.
All right, now that we know what we're looking for, let's take a quick trip around the world. We're about to see exactly where CBA fits into the global banking puzzle.
First up, Europe. And right away, the difference is just stark. You see that whole cluster of European banks kind of huddled in the bottom left? They're facing some serious headwinds, posting lower returns, and investors are giving them a lower price. And then, look way out there, all by itself in the top right. That's CBA. It's playing a completely different game.
Now let's hop over to Japan, and the contrast gets even crazier. I mean, Japanese banks have been fighting a low-interest rate world for decades, and you can really see it. Their profitability is low, their valuations are just pinned to the floor. And once again, CBA is the outlier, standing all alone.
Okay, so now for the real heavyweights, the U.S. banks. And this is where things get really interesting. You've got American giants like JP Morgan that are just incredibly efficient, right? They're generating some seriously high returns. But even when you put them up against these guys, you can see CBA still commands a premium on that price-to-book ratio. It's clear the market really values its stability and its dominance down under.
So here's the big takeaway from our world tour. The market is absolutely pricing CBA like a luxury asset. It's expensive, no doubt, but for a pretty good reason. Its profitability has, for the most part, justified that premium price. But, and you knew there was a but coming, a price this high leaves almost zero room for error. And that really brings us to the heart of the matter. We've established that CBA is a top-tier performer, but is it priced for a level of perfection that's just impossible to keep up? You know, is the stock price already baking in a flawless future that might not actually happen?
Let's look at CBA against its own history. This chart right here tracks its performance over the last 2 decades. I mean, you can see it's weathered everything from the 2008 financial crisis to the COVID pandemic, and it's generally kept up that strong profitability. But what I want you to do is look really closely at that little dot on the far right, the one for 2024. See just how high it is on that price axis?
You see, this is the real tension here. The premium valuation we're seeing today isn't totally new. We've actually seen peaks like this before. Just look back at 2006 or 2014, and what happened? They were followed by a drift back down to average. So the million-dollar question for any investor is this time different? Is this high price actually sustainable?
So to try and answer that, we've got to look beyond the big, flashy numbers. We need to, read the tea leaves. And we're going to do that by looking at some of the more subtle signals coming from 2 very important groups: the company's own directors and the investors who buy the stock for its income.
Now, this slide shows us 2 really important warning signs. Over on the left, we've got insider conviction, the people who know the business inside and out. It's directors. Well, they're showing some modest net selling. It's not a 5-alarm fire, but it's also not the strong skin-in-the-game buying that gives you a ton of confidence. Then, on the right, its appeal to dividend investors is shrinking. For years, CBA paid you way more than you could get from safe government bonds. But, as we're about to see, that advantage has basically evaporated.
And this chart, wow, it just drives that point home perfectly. Those bars show the extra cash, the extra yield CBA paid you compared to super safe government bonds. Look at that huge advantage it had for more than a decade. But now look all the way to the far right. That premium has totally collapsed. It's even gone negative. If you're an income investor, CBA just isn't the no-brainer choice it used to be.
So, let's pull all these threads together. On one hand, you have the bull case, a super high-quality, proven winner. And on the other, you've got the bear case, a stock that seems priced for perfection, with some little warning signs starting to flash. This brings us to the final act, defying financial gravity.
So really, the story so far is this classic battle. The thesis is that CBA is a best-in-class bank, and it's earned every penny of its premium valuation. But the antithesis is that it's priced for a perfect future. Right at the moment, its traditional advantages, like that juicy dividend yield, are disappearing. And that leads us to the ultimate question. How long can one company defy the simple gravity of valuation?
And that right there is the bottom line. Let's be clear. Commonwealth Bank is an exceptional business. It has absolutely earned its premium status over the years. But every single chart we've looked at today, from its global peers to its own deep history, raises the exact same unavoidable question. How long can it keep defying gravity before the market finally decides to pull it back down to earth